Ladies and gentlemen, welcome back to the channel. In today's episode, I'm going to be sharing with you a clip from this week's Ask Me Anything mentoring session, where our premium members get to ask me and the other analysts questions about the market or protocols. This episode is going to be our DeFi deep dive, where we cover Thales' new speed markets, their new exotic options platform on the Thales protocol on Arbitrum 1. We're going to compare and contrast Thales speed markets to the very popular Buffer Finance. We're going to go into everything in this episode, explain strategies to profit from both of these platforms, how exotic options platforms work, are they dangerous, how to get involved, and things you should know and things to avoid. The Premium Trading Group is a subscription-based signal and alpha group where our traders and analysts share their signals, trade analysis, and experience. And in addition, our members receive access to all of our coursework, our premium indicator suite, access to our private Discord, and much more. If you're interested in joining and improving your skills in the cryptocurrency markets, you can find more on our website, krakencryptocurrency.com. Link down in the description. I want to thank Alex81SG, longtime premium member, for requesting this topic. This one's for you. So the first thing up is we're going to switch to DeFi now. And this is going to be Thales. So Thales, from what Alex told me, and actually, it's funny. You guys can see. I just decided to. Yeah, I am.
I definitely said Thales. It was definitely a TH. I definitely said Thales.
Definitely put the H in there. That's it. Which is fun. I mean, maybe it's just funny for me because I have in addition to trading, I'm also a big, technology nerd. So I've done a lot of things like run nodes and set up Ethereum nodes and my own wallet. Yeah. And so Thales is a Linux operating system. The way it's designed is it's a privacy focused operating system, and you download it and put it on a flash drive or USB stick, and you are able to sit down at any computer, put the USB stick into the USB slot in any computer, and it will load up Thales, which just has Tor built into it, has cryptocurrency built into it, and it's designed for you to be able to basically sit down at any public computer. I've done it at libraries a lot back in the day. Plug your little stick in, open it up, do all your dark web transactions or whatever you want to do, and then be completely anonymous and clean. So I've used Thales a lot. So whenever I hear, so it's actually funny, like Alex, for months and months and months, you've been saying Thales, and not making fun of the way you pronounce it, but just in my head, I'm like, oh, we're doing some dark web stuff. So anyways, okay, let's get back to the presentation. Okay.
For months I've been saying Thales, yeah, but yeah, I didn't say Thales.
It's all right. I'm gonna say Thales. Anyways, maybe we can get maybe we go to the devs on they'll correct the answer. Okay, so Thales has just launched this speed market, which is a competitor to Buffer. Okay, this is me on Buffer. This is kind of my play around wallet, and I have of course taken trades on Buffer, not with this wallet address. I actually had set up a dedicated wallet address specifically for Buffer. Several months ago, I was playing around with a couple of Buffer Finance bots that Alex had put on my radar, and unfortunately, I wasn't really get them able to work. My programming skills were not that extent. I'm sure I could have figured it out, but I just had other things on my plate. So I am familiar with Buffer, and for those of you who are watching this later and are not familiar, just real quickly. Buffer Finance is an exotic options platform, and it allows you to take very short or medium term time frame bets on the direction of Bitcoin and several other assets here. 1, 2, 3, 4, 5, 6. Yeah. And it's very simple, right? You put in the amount you want to bet, and based on where current price is right now, you just simply say, is price going to be above or below current price within 3 minutes? And if you're right, you get paid out. And if you're wrong, you lose your entire bet. So pretty fun. Buffer has also gamified it quite a bit. They have a leaderboard and all of this stuff. So there's a gamification aspect. Buffer is on Polygon and Arbitrum 1. Of course, I would recommend doing it on Arbitrum 1, although there is an argument to doing it on Matic. Sometimes Matic is probably significantly cheaper, but just being on Arbitrum is going to give you access to, I think, a lot more fun or DeFi tokens, speculation, than Matic. I don't see a lot... this sounds derogatory. I just don't see a lot that excites me personally happening on Matic. I think Matic is great because it's really cheap and fast, but yeah, Optimism is my favorite chain. So I digress.
Yeah, the cool thing of using Buffer on Arbitrum is that you can use ARB token or the Buffer token as a collateral in addition to USDC.
Yeah, and I have some thoughts on that too. The other thing, and in addition to that, is with the Buffer token, there's additional incentivization as well. Plus, you get to speculate on a DeFi token. So that's kind of neat. They also have the tier system, right? Bronze, silver, gold, based on. Correct me if I'm wrong, but like how successful you are, or how much you trade, or how much volume you do. Correct, Alex?
No, it's based on the NFT that they have. They have some NFTs based on rarity. You get a different tier, and based on the tier, you get a higher or lower payout.
Oh, okay. Bet. Okay, cool. All right. So yeah, some more gamification. So Thales has launched Speed Markets, which is a direct competitor. And here's what I like and don't like about each of these. So obviously, both platforms are easy to use. I would actually argue that Buffer is simpler to use. It has a simpler user interface. There are less buttons to click. But again, there's nothing wrong with Thales interface. This is nice and sexy. I actually like the visual look of this more. It is a bit more complicated. Obviously, there are 1, 2, 3, 4 things here. As opposed to 2 things here, like time and bet. That's it. Here we've got time, again. So now Thales only has Bitcoin and Ethereum currently, up and down. And then the big difference initially is just, of course, the time preference, right? So Buffer obviously allows you to trade down to the 3, 5, 15 minute. And you'll notice on Thales, I went to minutes. And if I put in 1 minute, it will tell you that the minimum time is 60 minutes. So the shortest time horizon for Thales with this betting system is going to be the difference between down to the 3 minute or the minimum being an hour. So if you want to do more degen, quick, kind of intraday scalping, then obviously Buffer Finance has that option for you. Whereas if you're okay with taking longer trades, which are still day trades, right? You get to open up an hour position. An hour is only an hour. But that would be Thales. And of course, the big difference on the flip side of that is that the highest, I believe, is the highest we can go 4 hours on Buffer, Alex?
Yeah.
Okay, yeah. The highest we can go being 4 hours, whereas we can go up to a day on Buffer, which is pretty cool. Can we, is 25? Can we go 25? Yeah, so a day being the highest period.
And the thing, if on both platforms, you can also go in fractions of those time frames, right? So you can go 1 hour and 15 minutes, 1 hour and 11 minutes.
Okay.
Right. So everything in between you can do.
Okay, so here I could do 63 minutes. Okay, yeah, okay, neat. And then over here, and I will say that I think this is a little easier. I was just saying that I like Buffer's interface. It's simpler. I do think that this minutes hours thing is a little nicer. You can even put a specific time, which is kind of neat. Over here, you got to click the edit button, and then you just got to use this. Yeah, you got to go up and down instead of So, and although yes, you can
get out our fib time indicators.
Yeah.
Do a Gann circle on the clock.
Yeah. One of the Fibonacci spirals.
Yeah.
Okay. So my other initial thoughts, I spent about 30 minutes on this and, kind of just reviewing, and I actually took some trades. I will say, so far, and you can actually see here, I'll open up my MetaMask and go to activity. And yeah, there's some DeFi Llama stuff, some GMX stuff. For some reason, it's not showing my trades. But I did open up like 3 or 2. I opened up 2 positions just very, very quickly. But not in both situations, my open positions weren't visible here, nor were my closed positions. And, I tried changing my RPC and all this kind of stuff, which is a common issue. So that's not a big problem. I'm sure it's just a little, maybe bug or just my problem, but just a little nitpick there. Whereas I've never had those issues on buffer, like they automatically show up here. I will also say that the buffer setup too, just visually, is going to be much more comfortable for those who are familiar trading on an exchange. Whereas Thales, this looks more like a pop-up DApp, right? It looks a little sus. So even though Thales is a much again, I don't want to be derogatory to buffer, but Thales is a much bigger protocol, so it should be quote unquote more reputable. Now, Thales is, upon initial view, a little less gamified. There's not the leaderboard, none of that stuff, no bronze tier, no NFT, nothing like that. Obviously, Thales have their own system in the background, but with their token. But just on the outset, if we're looking at kind of fundamentals, like which project might have the better ability to grow, it's a hard argument. Like on one hand, Buffer seems funner. They have a little bit more going on. They've been around a little bit longer with this specific medium, and so they specialize in this. It's also gamified, and they've got all these other things. Thales isn't, but at the same time, Thales also has a much larger ecosystem in general, so there's more potential liquidity there, right? Like, you'll see this. Yeah. If you go to the supermarket, you're going to see that next to the supermarket, there's going to be a mini mall with your great clips and your tanning salons. And this is a very common concept in all business, which is, smaller companies will piggyback off the location or success of the larger companies. So similar concept here. Thales has a much larger market capitalization and community, so potentially more individuals to come into this. However, there's no direct speculation on the speed market. There's no speed market token. There's just the Thales token. Whereas Buffer, it's all basically speed. You can speculate directly on the Buffer token, which lower market capitalization, bigger risk reward ratio there. Okay.
Yeah. So after playing with Buffer I've been very involved with Buffer for months. Mm-hmm. To me, the biggest thing about these Thales speed markets is that the payout, it's out. It just hits it out of the park.
Yeah.
It's almost 100%. It's 95%. So you bet $10, so you win 10 minus a 5% fee. 5%. Whereas Buffer has, I think most that you can get to is 73% with the NFT and all the shit, right? Then there's a bunch of other stuff in the background that makes the payouts kind of dynamic on the Buffer. So if the open interest is too high, you might just get like a 20% payout at that point in time. Yeah, that's a tricky thing. So it's very hard to predict. So to me, when I was thinking about Thales and how we do PTP and how we calculate, when a strategy is profitable, with a 95% payout, what that means is that all you need is a strategy that wins 51% of the times, pretty much, if not less. Right, you need a
it would be significantly less because your payout is so big.
You need a wins to losses ratio 1.05 to be profitable.
Mm-hmm. Wait. Hold on a second. So this is an interest. So this obviously it's simple, but it's just not on the tip of my tongue because it's a little different. So because normally when you're doing an EV calculation like this for any kind of strategy, your upside and downside are they're linear. They're linear. Whereas with this, it's different because you have the destruction of your entire capital. So this is more like, well, it's like options. So I think. Give me a little bit on that. I don't think I'm going to have an answer right here in the moment. I don't want to sit here and try to just cook my brain. But yeah, I feel like.
No, I feel like the criteria is the same, right? Or from an operatingly, it would be the same, right? So let's say that you have a capital of $1,000. You risk every trade. You risk 1%. So every trade on Thales, you risk $10.
Mhm.
If you lose, you lose $10. If you win, you win 19. I mean, you win $9.5,
Mhm.
right? 950. So to be profitable, you need, so the risk management, it's you can handle it that way, right? You bet every time whatever 1% or 2% of your capital is. But the thing is that now, instead of having a TP level that's a one time the average true range, and a stop loss that's a 1.5 the average true range, which means that you need to have about 1.6 win to losses ratio to be profitable. Here it's almost 1-to-1, right? So your wins to losses ratios needs to be slightly higher than 1, just because you have that 0.5 that 5% fee, right? Just because you have that, so you don't win $10 if you bet 10, you win 950 something.
Yeah. Go ahead. Sorry.
Right. So that's why I was thinking that as long as you can have a strategy that can give you a wins to losses ratio of more than 1.05 or more than 51% wins, then you are in the money.
Yeah. You are correct. That is right. The only nitpick I will say about what you just said is, or not nitpick necessarily, but just thing to consider is that so this is the same with options. This is just options EV calculation. With options, if you, not when you're buying calls or puts, but when you're selling, when you are selling calls or puts, your total upside is known in advance, right? So your total upside is capped. But with options, your total downside when you're selling options is not capped. So you have a fixed amount of profit, but potentially an unlimited amount of loss. It's similar with buying calls, right, or buying puts, right? Like it's different for shorts. Your upside is technically limited to 0. That's the lowest price can go. Upside potential is theoretically unlimited, but that markets don't work that way. Nothing ever goes just straight up in a line. So, but with trading, like with with futures, the difference between futures is that similarly, like when you enter into a trade, so when you enter into a trade, if you allow your trades to run, or you don't take all your profits at your TPs, you could get potentially unlimited upside if you let your winners run. With both speed markets and buffer, your upside is always going to be limited. Like, your trade can't run. Like, you either win or you lose, and it's a fixed amount, which, obviously, I think a lot of this is going to come down to preference and just where people kind of find their niche and fit in. There obviously are very attractive things about this, and then very attractive things about regular trading. One thing that I just noticed from looking at this too, and obviously speed markets is relatively new, but there's only about 4.3 grand of liquidity for Bitcoin, which obviously that can grow in time. But for a large pocketed, or not even for a large pocketed investor, like for an average trader with like a $5,000 account balance, this is probably not going to be, and this might be okay for them, but anything bigger than that, where you're taking $5,000 trades, like obviously this isn't going to work. Okay, so yeah, I went over. Okay, so getting back to Thales, what the big, obviously the big differences right now are going to be the liquidity, and we've gone over some kind of minor differences. One thing I think not insignificant difference here is the amount of tokens that you can use as margin on Thales as opposed to Buffer. Buffer, you only have the option of USDC, ARB, and Buffer. On Thales, you have more than twice that, right? USDC, DAI, USDT, ARB, ETH, WETH. So I think that's good there. And then obviously the big elephant in the room, which is Thales' significantly higher payouts, right? Like 100% payout minus a 5% fee. So that right there is really cool. Which of these platforms is honestly better? Well, from a profitability standpoint, all other things being equal, it's Thales. Like, you can just make more money on Thales because it just has a higher payout. And at the end of the day, really in the analysis, that's all that matters. Currently, the big difference between being able to just be like, all right, well, fuck buffer, we're going to Thales, is just the current amount of liquidity, right? You like nobody, like there's just not a person out here who's going to be able to do big bets on Thales until this liquidity grows significantly. Like, can we see the liquidity in buffer? Is there? I'm sure we can. I'm not sure where on the platform to go to see that. Maybe analytics.
Yeah, buffer it's had all kinds of issues. They do have the liquidity, they don't have the users now.
Yeah, total volume 6.5 mil, and we can even go to DeFi Llama. Yeah, DeFi Llama has 1.95 million locked, so that's much more impressive than $6 million in volume. But if we go to Buffer Finance, we should be able to see, yeah, total value locked 1.79 million. So actually, just about as much as Thales. Interestingly enough, very cool. Yeah, so big pool.
Yeah,
big pool. Buffer also has like more specific ways that you can like pool liquidity and earn money that way, specifically related to this, where not that Thales doesn't, but the way that Thales has their ecosystem with the Thales token, not directly related to the speed markets. So in the final analysis, just based on the only thing that matters is, so we've gone over some nitpicks between the platform, we've gone over some nitpicks and like margin and all these kind of things. There's pros and cons on both sides, but honestly, at the end of the day, the most simplest thing is just going to be which platform has the higher payout, assuming that liquidity bumps up. So since Thales just has a significantly higher payout, assuming that they can continue to raise liquidity for this new product that they have, it's got to be Thales all the way. I mean, I think it's just as simple as that. Or we see Buffer, realize this and raise to compete. Or we see Thales like unable to sustain this high payout and realize that, we thought we were going to cut the legs out from under Buffer, but Buffer did exactly what they did because they had done more advanced P&L calculations and knew that this was more sustainable. So we'll really see. For right now, for just playing around, I think it's cool. And honestly, like I played around with this earlier. It's fun, right? It's fun. It's low risk. You can make some good money doing it. So I recommend both of these platforms to anybody, and it's going to just come down to preference, I think, at the end of the day. But with the big thing there being assuming that liquidity can get pumped up in Thales, it's got to be Thales. It's got a higher payout. Now, Alex, you had specifically asked about potentially using this for day trading. I think we've covered that, and for hedging. So I do just want to throw that out there. For those of you who are trading futures and are looking for perhaps an additional or more exotic way to hedge your positions, you can do it through these platforms. What's really great about these, like what honestly is really, really great. So I do a lot of options trading on LedgerX, and I've made some good money from LedgerX, but options trading on LedgerX, at least the way I do it, is very slow. Like I buy leaps, which are year-long contracts, or 3-month positions or 6-month positions on LedgerX. To hedge my portfolio. You can't really use LedgerX or barely even Deribit to hedge like day trade scalps, right? It's just not very feasible with in and out fees and premium. With something like this is a beautiful tool to use to hedge exposure. Now, I don't have the time to go into it right now because obviously there is there's some kind of complicated math we'd have to do based on obviously what is the pros and cons, or what is the profit from hedging using an options contract, which is also an extra level of complexity and complication. Like, in addition to having the screen open for your trading, you now have to flip back and make sure that you have the money on chain and all this and stuff, right? Whereas with just hedging with, like, let's say a sub account, like let's take ByBit for example, you create a sub account, and if you want to hedge your position, let's say you're in a long trade and you're like, this isn't going the way I thought, I think the market's going to dump, you just jump to your sub account and you open up an equivalent or larger short. And then if your suspicions prove out, boom, you've made money or not lost anything. And if you're incorrect, you can just close the position out. So I think that like rubber on the road, that's probably a little bit more convenient. Obviously that has its own complications, but this is an equally feasible alternative if you are more comfortable with DeFi and you're just comfortable with, using MetaMask and, having two screens and all that kind of stuff. You don't have to have two screens, but I just wanted to throw that out there. I don't, like I said, I don't have a firm answer on this. Like, I don't think either or is better. Actually, I do. I probably do think that hedging via a future short on the same platform you're taking longs is probably more convenient and certainly is my preferred way to do it. Like, I wouldn't be hedging any like large positions that I have on Fairdesk currently with options. But I also don't want to dismiss it entirely. Like, it is a perfectly valid strategy, and using options, these are exotic options, to hedge your spot or futures positions is a tradition as old as 30, 40 years of options markets. So that absolutely nothing wrong with that. So yeah, many strategies I could see here that could be good. Thank you so much for watching all the way to the end of the video. Let me know down in the comments section what you think about Thales Speed Market and Buffer Finance. Which one is better? Have you used them? And what is your experience with them? Make sure you like and subscribe so you never miss an episode, and I'll see you in the next one. Oh, by the way, why don't you watch this video down here next? Cheers.